Welcome to our video podcast. My name is Darson Grantham, and this is Jared. He's a co-host with me. And in this channel or on this content, we just talk about real estate in general, whether it's Des Moines, local, Iowa, national. We both work pretty heavily in the real estate investing world, and whether it's exactly selling, buying, the economy, financial markets, business partnership, that's really what we talk about on this podcast.
What we talk about is really investing here. And again, Jared Huseman here, president of the Catalyst team, KV Commercial, again, co-host with Darson here. We're just agents and we're owners here in the Des Moines, Iowa market. And, we just talk about relevant information for you guys as owners, as investors, whether that be in syndications, whether that be into REITs, whether it be into real estate. We just try to give you general advice on what we're seeing in the market. And the reason our content is so relevant, in my opinion, is because we're actually owners ourselves. We're actually doing this. We talk the talk, we walk the walk. So this isn't like we're just on some podium here pitching you how great we are. You've never seen one of our deals. Like you can see us, you can talk to us, and we're going to give you relevant information. That's one reason the theme of my team, the motto we use a lot is trust through transparency. We like to build trust through transparency as being open and honest about where we're at in the market and telling you sometimes whether deals are good, whether they're bad, just our general thoughts. We can be wrong. We discussed, I think, last week, maybe we can be wrong in our investments. We don't always know everything. In fact, we definitely don't know everything, but we just try to share our perspective on what we see in the market.
Yeah. I mean, what he said is good. I would say just the why we do it is because I think both of us are pretty heavy content and I call self-help junkies. Like we're always looking to try to improve. And so when we talk with people, it's very much more consultative as opposed to sales.
And I'm actually going to agree with you as well, but I'm also going to add another point. We just love talking real estate. Yeah. Like if you think this is at all interesting, this is how our offices are just like down the street from each other in our office. We just, a few yards away. And you should see how many conversations we have at all times in our office
which is why we started, right? Like we started this podcast and YouTube, whatever, just because we're like, man, we talk about some pretty solid stuff and it's just lost between us two,
right? And
no one else got to hear any of the content. And not to boost our own horn, but like it's pretty good content. Like it's good topics and stuff. So anyway, that's why we're doing it. And he introduced himself. So my name is Darson Grantham. I run a real estate team, kind of smaller and investment properties, and then also residential.
And our team, Catalyst team, again, another KW commercial team. We focus on apartments across the state of Iowa. So our geographic region is Iowa right now. Apartments, really the bigger stuff, 8 units plus is kind of our minimum. Nothing less than 8 units just kind of isn't worth it. Actually, I refer a lot of the stuff less than 8 to this guy right here. He knows it. That's one reason we work together so well. He takes care of all the flippers, the house investors, duplexes, and such. And I kind of focus on the, I wouldn't say bigger owners, because not all bigger owners, but just the apartment owners. It's a very different mindset owning apartments to houses. In fact, we may even discuss that psychology difference at some point in time.
Yep. News for the week in real estate. You got anything?
The biggest thing I got to say right now is interest rates. I know it's common and we're all hearing it, but we're seeing the 10-year Treasury tick up above 2 points. We're seeing 1.9s and 2s.
So what does that mean?
Yes. You got me. I was going to this next.
Okay, sorry.
So what the 10-year Treasury is, essentially the benchmark on debt. And there's, of course, the 3-year, 5-year, 7-year, and 10-year. The reason it's so important for investors is because most investors are working with institutions who are going to do terms. They're going to do amortizations of 25, 20, 30 years or longer, and then they're going to do balloon payments. And those balloon payments are based on whatever that Treasury yield correlates to. So if it's a 10-year balloon, it's going to go off the 10-year Treasury. And right now, that's at about a 1.92% interest rate, depending on when you're watching this. And most banks are going to use arbitrage. We'll discuss that later, but banks are going to lend out to 2.5 points above whatever prime is. So if the 10-year Treasury prime is at 1.9, banks are going to lend out at 2 points above it. That's 3.9 up to 4.4.
Yep.
So basic numbers.
Which is fun because I talked to some commercial lenders last Friday, so 4 days ago, and I said, give me a range, what rates are we looking at, what terms are we looking at, and it nails that. He goes, it'll be 3.75 up to 4.25, depending on if you want a 5-year fixed or 5-year adjustable rate or you want a 10-year adjustable rate. and then what points you want down. And I'm like, okay, I mean, that gives me a good number.
Right. And that's what's going to affect, because at the end of the day, as investors are out there looking to create cash flow is another term for yield. They're just similar terms. And at the end of the day, whatever you borrow at and what you buy at for cap rate, you want to buy at a high cap and borrow at a low cap, or borrow at a low interest rate. That difference is what's going to create your cash flow. So when rates go up, that means cap rates, generally speaking, have to go up as well, which makes prices fall because they work inversely.
Yep.
So the big topic for this week is just interest rates. We saw, I think numbers came out last weekend as well, last week. January, December inflation, 7.5%, 7.9%. I mean, crazy numbers we're talking about here for inflation. So that's the big headline news right now that everybody's talking about.
Yeah, and I know just this much on the economy and like how the financial markets work. So I'm not incredibly versed on it, but it's just unknown the future, right? So if you think about an investor, most markets work with how much do we know about the future? What should we invest in? If you don't know about the future, people halt and they say, okay, let me take a pause. Let's just hold off. They only make investments on what they are most certain on, right? So with the high inflation and the Fed's announcing future interest rate hikes, like things are known, but they're only partially known because the Fed has had a history of backtracking or moving forward too fast.
Right.
And so although the Fed has said what they're going to do and they've been very consistent on what they've said, this is what we're doing. March was it 10th or 15th? They're going to hike rates. So has that already priced into the market or not, right?
So I think what you're saying here, I'm going to make it a little bit high level thing, is in the vacuum of the future that no one knows, every investor is going to take what they believe to be a known factor today to make the best decisions.
Yes. Yep.
And based upon today's information that we have, and the information coming out in the last week with inflation and the Federal Reserve, everybody's anticipating rate hikes to jump up. We've seen this a lot in the stock market. The thing about real estate is real estate's a little slower moving than the stock market. So use the stock market as a gauge to maybe track what's going to happen in the economy, but real estate's a little slower moving yet. So how's that going to look 90 days down the road, 45 days, especially for commercial? Commercial, we're looking at deals 45, 60 days out. So getting those rates and that interest rate in 3 months when our due diligence is so long is different. For a house, it's different as well.
Yep.
But I mean, for stats in the market, I guess my question for you for news is, maybe you know this, how many houses are on the market right now in Des Moines on the MLS?
It's under 600 resale.
It's going to resale. Do you know what our average is?
I hate average because what are you comparing it to?
Right.
It's down from last year, right? Like it's a known thing in the retail residential market that there just aren't very many houses for sale.
Okay.
There are a lot of, not say a lot, there is a fair amount of houses that are being listed though. It's one of my big pet peeves when agents say, I have 10 buyers, but they can't find a house. In my opinion, that is your fault that you can't get them a house or you haven't vetted them out, because there are houses that are selling. The number of sales is actually on par with last year.
Is it? Okay.
Yes, the number of sales is on par with last year.
Okay.
But the active inventory is low.
Okay.
So people, to me, that means people are either scared to list, but when they find what they want, they'll immediately list and then sell their house, right?
Okay.
So there isn't a product on the shelves. Think of it as a grocery store.
Okay, so let's tie back for our listeners then. So if you're looking to buy right now, what advice would you give the buyers then in our market? I mean, to me, what you're saying here is that if our sales are on pace, and I'm an investor watching this podcast, sales are on pace but listings are down. To me, what that means is
listings aren't down. Active inventory is down.
active inventory is down, but sales are on pace. But
Which means listings are on pace too.
Okay.
So sales and listings on pace.
Okay.
From last year, I say pace, whatever pace means.
Okay.
Same as last year. Very not significantly different, but the number of active listings are.
Okay.
So as a buyer, to me, if you truly want to buy, you have to have your pre-approval letter and you have to have your house ready to list tomorrow.
Okay.
Because when you then put the offer in on the house that you want because it came on to the market,
Okay.
your house can be sold within a reasonable period of time,
Okay.
right? So if you're scared of listing because you don't know where you're going to move to, that's usually the situation. On buyers, if you don't have a house to list, like you just have to be ready to go at any point in time go put an offer on a property.
So, this brings up, I think, a really interesting theme that I see a lot in apartments. I'd love to hear your insight on it for residential. But what a lot of apartment owners misjudge or forget is that you can prep an apartment complex for sale. So I've got sometimes owners will come to me and say, look, Jared, I want to sell this property. I can see that the market's hot right now, that rates are going up, whatever it is. I need to prepare this apartment for sale so it's going to have the maximum exposure, get the best price.
Yep.
And while I am prepping it, we're going to do X, Y, and Z. And the owner and I will actually go through a list of things they can do to prepare that, whether it's raise rates, decrease their expenses, get the common areas cleaned, et cetera. Those are just a few of the things we go through. We can maybe market that property as a pocket as well until it's ready. I know it's a shady term, it's not used a lot, but
it's not shady. It's just a term that the Realtors Association has frowned upon in the past.
Right.
So the number, when he says pocket deals, it means one agent finds both the seller and the buyer, and it's never actively marketed on any of the
traditional,
any of the public websites.
Right. But this brings up again, it's with what you just said with sales and listings being on pace. Maybe that's a great topic point is for anybody that's considering a sale in the next few months. Maybe you can reach out to Darson and myself, and we can help you go through a pre-listings checklist, preparing your property, whether you're looking to flip it, whether it's an investment house you're looking to get rid of. If you're looking to list your property at all apartment complex, maybe that's a good time to reach out to us. We can help you prepare that property for sale, knowing what we have in the market right now and seeing where our active listings are at.
Yep. And so as an investor, when you say that to me, I'm like, shit, how much work is this going to be? Like, what do I have to take? Because I don't do this full time. I don't invest full time, right? So my schedule's loaded. So what is it going to be for you to tell me what I need to do? Like, how much work is it going to be?
Right. Well, that's where we need to sit down and figure out what it looks like. I mean, everybody's different. So that's why we just got to go through the process.
Yep. So it could be as quick as a Zoom phone call.
Yep.
And it could be as extensive as we walk through or around. You're not going to walk through every unit on this. You're going to walk around the property and say, like, as a buyer, I would want to make sure that I see that this, and this is fixed. Right. So as seller, you don't want the buyer to find a reason not to buy the property.
Right. Well, I mean, for you, I think your case is point example, and I don't know the answer, but if anybody owns a duplex or a fourplex right now in our market or any market really, and one of those tenants is coming due for a new lease in the spring here, to me that screams great time to be selling. You need to be preparing that because there are some people looking to house hack right now that they would love to buy a duplex or a fourplex, get great financing as the tenant in common. Yeah. And so if I'm an owner of a duplex or a fourplex and I'm at all considering a sale in the next 3 to 6 months, I'd be very much getting prepped for that. The moment that tenant moves out, we're going to prep that thing for sale. Yep. And I don't know if it's better to fix the property up and then put it on the market, the vacant unit, or just let it be there vacant and let a buyer do that work themselves. I don't know.
I think it's better to fix it up. I've seen a few that have been even off market listed, and I'm like, they did very minimal lipstick, right? Like flooring, paint, some fixtures. Duplexes aren't that extensive usually on your flip or your remodel, and they sold for a price that I'm like, no investor is buying that. That is totally someone that is living in it and renting out the other side, which is a perfect, makes a lot of sense for that person.
Right.
But for an investor, they're like, yeah, that's a little too much. But there's so many people looking to house hack.
And that's a huge difference, I think, between our market that I don't even deal with very much is no one wants to buy a 50-unit apartment complex and say, God, I really want to move into this and take all the calls from the tenants and do the management myself. I mean, it's just not done per se. I mean, we have an investment and it's investment only. But yeah, I think that's news. I mean, that's something that people should be thinking about right now. Yep. And especially and of course the fun one is, it's tax time, guys. Another thing we're talking about is taxes are coming up here really soon. His eyes got big, I think he forgot about them too. Taxes are coming up, so think about that.
I'm filing an extension. We're going to October. There's no way I'm filing mine in April.
We'll go over that later. Tune in next week.
No, I ain't doing it next week either. Okay, other news of the week. I found this pretty interesting just because I dabble with the crypto market. The first house was just sold in the United States using an NFT. There's a ton of controversy of what does this look like. I saw an agent on an agent forum on Facebook post about it, and there was just an incredible number of agents they're poo-pooing on the process of selling a house in an NFT. If you don't know an NFT, go research it. I'm not going to get into it here. I would just encourage you as a listener that if you're at all trying to get ahead of the market, at all trying to just be someone in the know, go research the process that house went through to sell. It's actually very fascinating. It's not as complicated as it seems, and not as risky as it seems. The list that I saw of agents question, they're like, well, what if this? What if that? What if this? think about the prep of it. So if that owner had that house liens all taken care of, inspection already done by a licensed someone that insured the inspection, however that looks like. You've already had walkthroughs, right?
Okay.
Like everything is all done thinking of after the sale, before the sale.
So talk about what this looks like. So I did not hear this. So I want to myself dive in for questions. So the house was sold, or the house was made into an NFT, and then the NFT was sold.
Yep.
So it was made into an NFT, and then the NFT was sold.
Yep. Which owns the house.
Which owns the house. So they created this NFT, which is called 123 NFT Main
Similar
Street.
to an LLC.
Similar to an LLC.
That's what
and
it feels like. Yep.
Yeah, that's exactly my question. So real quick, if you can, and maybe you can give us some insights on this, I'd love to hear. Give us 3 maybe pros of why someone would do this, and maybe 3 cons that people were talking about of why this is. I mean,
I don't know if I can think of 3 because
give me a couple
you're putting me on the spot.
Right.
One of the reasons I've heard is the next generation, which is younger than me, like they don't like the complicatedness of real estate transaction. It's super convoluted, but the trust factor, like it's all used to make sure the trust is there, right? So you're purchasing, you're going through the process because all of these parties are looking out for you, right? Because you don't trust any one party, right? You struggle that you don't want to be taken advantage of.
Right.
But the reason the NFT business for real estate has morphed is because it is the contract that says all of that trust stuff has already been taken care of, and all you have to do is like the property, submit the money, and it's done. And you don't have to go through the scare, the heartache, the process, the crappy process of buying a property and wondering who's taking care of what. Is it all getting taken care of?
Okay.
Who can I trust?
So I'm going to actually add 2 points to this as well. That's very interesting, actually. Maybe even a third point for local news. But as you tap this, I want to say to all the listeners out there too, keep an eye on this. This is exactly why the blockchain, maybe not NFTs, but the blockchain is going to drastically change real estate. Because the blockchain, the only way to describe it is think of in a massive Excel sheet where once you enter information into a cell at A1, you cannot change that. So it's very easy to track ownership levels. So imagine having the blockchain, where you can track what inspection done, what repairs were made, who owned this property, what was the mortgage on it, all digitally. The blockchain will drastically change how real estate's done, whether that's NFT, metaverse, however it is. But this is stuff that's going to look very different for our market in 20 years. Absolutely change it. To your point, I want to add 2 more things quick. One, since you brought up, I forgot this, McDonald's actually just filed a patent on digital metaverse fast food as well. So for commercial real estate people watching, McDonald's just had a patent on metaverse fast food being drive-through. I don't know what it looks like. You can feel free to go out and read that. But obviously companies are getting serious about the metaverse and the blockchain. And just because I just forgot, I want to make sure I mention this. One piece of headline news for our local market, huge news for all of us. The Amazon facility in Bondurant is now up for sale for $355 million plus.
So if you want to buy a huge facility.
Thing. The reason I say this though is because it is the first time Amazon facility is going for sale in the whole United States this year. It is also going to be the largest single transaction in the history of Polk County when it sells. So all I'm saying is that this is going to continue to put Des Moines on the map for investors. We've already seen it a lot in multifamily. We're going to see it again for industrial. I'm not pointing out because we're all going to go out and buy a $355 million industrial deal, but it's going to put us on the map more. When we see these big sales, we're going to continue to see money coming into our market, which will drastically drop cap rates.
So my initial thought, and it might be because I'm pretty positive, but my first thought is, oh shit, why are they selling? Like, what is it about Des Moines that didn't satisfy their need?
Right.
Any thoughts?
So it's funny you say this actually, because one of the common themes came in a couple weeks ago in one of my mastermind groups, essentially, with other commercial agents across the country, is a lot of commercial agents have said, we have seen a lot of the big developers, big owners selling in the last 6 months. A lot of them have been selling, and the question has become, what do they know that we maybe don't?
Yeah.
And we have to look at that with a grain of salt with a couple of things. One, a lot of these guys probably bought, and finance at low cap rates, and they're afraid cap rates are going to go up. Let's just be honest. Interest rates going up, cap rates go up, prices go down. It's just how the market works. The other thing is, at least for multifamily, I'm going to hit some multifamily perspective.
That's what I was going to say. Because Amazon, like that warehouse, that manufacturing,
right.
That's different. Like the cap rate to them has got to be irrelevant.
Right. So I'm going to hit this with a different perspective here. The reason we're seeing, this was brought up in this group as well, specifically multifamily. I'll talk about that just for a second here. and specifically even our market, we saw a ton of development take place in 2015, 16, and 17, going into that 18 market. We spent all of 19, 20, and 21 absorbing what was built. And so we've now absorbed a lot of that. So a lot of these developers are saying, we've got our units built, we've got them filled now, we are going to sell them at very high prices, low cap rates, take our money out, and go build some more. Because at the same point, not only do we see this huge development for these 3 to 5 years, we also have seen no development take place in the last 3 to 5 years since they all got developed. Des Moines itself continues to grow at about a 2.5%, 3% growth rate. I won't go into numbers what that all looks like, but essentially every year we are 1,000 units short of meeting the demand of new people moving to Des Moines. Yep. Even with the inventory, that's why our vacancy rates are staying so low, and our rates, rental rates, continue to rise, is because we are not building fast enough to support the growth. So a lot of these developers are saying, look, we've built, we filled, let's sell, get our money back out, and go do it again.
Gotcha. So
these developers are building and they're selling. So here's one thing that I do a lot to keep track of our local economy. And this is, anybody can do this, right? This is easy knowledge. Go to every city in our market, Waukee, Urbandale, Ankeny, Des Moines, and you can look at their city agendas for their planning and zoning and city council minutes. And if you sign up, you can get emails sent to you with the agendas and the planning and zoning minutes. Not only the minutes, the agendas, all that. So what I do is I sit down, and I'm kind of a nerd, but on my weekends, specifically usually Friday, Saturday nights, or Saturday mornings, Friday nights, I get usually an email from all the cities, Waukee, Ankeny, Johnston, Grimes, whatever it may be, Urbandale, Des Moines. I get all the planning and zoning minutes and the city council minutes and the agendas for the next one. And I sit down and I just scan it. And I read about who's developing what where. And that gives me an insight of to where development's going.
Yep.
So I like to sit down and read the minutes and the agendas. The agendas give you kind of an insight what's coming. The minutes show you what was talked about, obviously. But this is a great way for anybody who wants to be in the know before the local economy is just read the planning and zoning minutes. Yep. I can tell you this is what the experts do.
Yes. I think that the time commitment to that is exhaustive.
Less than you might think, but yeah.
Really? And it's monthly, right?
So city council, it depends on the city. Some cities only meet once a month, some meet every 2 weeks.
Yeah.
But they send out agendas prior to that as well. And you'd be surprised how many cities don't have huge agendas.
So it could just be a quick glance.
It could just be a quick glance to say, you know what, they're putting up these many plats. You don't necessarily have to read all this. You can learn how to scan it quickly. I would say, generally speaking, I spend about 30 minutes a week at the most reviewing the planning and zoning minutes and agendas to know what's happening in our market. The other thing you can do beyond just getting on planning and zoning, which what you said takes a lot of time, this is going to take even more time, it's even more exhausting, which I've done this, is whatever city you're looking to invest in, put that city in the Google headline, and behind it type in comprehensive plan. And behind it they have, it's colloquially known as a comp plan. Or you can call up your city official and say, I'd like to have the comp plan for this city. Every city has a 20-year plan on where they're looking to develop and grow. Every city. I mean, anybody that's a city in the U.S. pretty much has a comp plan. Yep. So if you're an investor and you're investing in a new market specifically, or you're just investing in your own market, pull up and read the comp plan. Now, I caution you, this will take time. Comp plans generally range between 75 to 100 pages. And the bigger the city, they may even have comp plans specifically for certain parts of the city. They may say, I've got a 75-page plan for the north side, one for the south side. So it gets even more exhaustive as you get into that level. But if you want to be in the know of what the economy's going, check the planning and zoning, check city council minutes, agendas, check the comp plan.
So this is like due diligence, right?
Yeah.
So I work with a lot of out-of-state investors that are trying to decide, is Des Moines the place for me? And I've talked in the past, I always try to talk them out of Des Moines, and not because I'm like greedy and I'm like, Des Moines should, I want to buy everything in Des Moines, because I want them to know like, Des Moines is not the best appreciation and the best cash flow. It's a really good combination between the two, and you have to understand the economy of Des Moines and Iowa in general in order to invest in Des Moines. Because of that, because you're not going to get good cash flow, like really good cash flow, but it's not going to be bad. But anyway, my point in that is wherever you're investing, like that's a really good tip. And any city has that. The other thing that I hear a lot of people do is like, oh, we looked at all the news articles. And my struggle with news articles is because if you think that they don't have an agenda, you're wrong. I don't believe in news, most news publications, to give you a true economic outlook of an area. So if you are considering investing any sizable amount of money, go read some of these community comp plans, whatever. Talk to someone that knows a lot about it. I know, like, just talking through this with Jared, I think that there is a need for someone to give unbiased economic opinions about Des Moines and Iowa, and I'm going to vet through what that looks like, who that might be, who I can talk to that can provide that, because there is. Do you know of any?
I don't know, but the funny part I'm laughing is because you're so right in the sense that if you ever go to a city's page and you research where they're at in the news, like I'm going to use Greater Des Moines as a great example. If you go to the Greater Des Moines Partnership, which is a news outlet to promote Des Moines, and it's great. I love the Des Moines Partnership. I love what they've done. We won't go into the history and the details of why it's fantastic. But if you go to that website, all you're going to see is Des Moines ranked number 1 and 2 in all these different facets. Like a city is not going to market, don't come to us, we have X or Y or Z. Like we're having affordability issues, we're having crime. Like if you go to Gary, Indiana's website, I'm assuming that Gary, Indiana is saying how great they are. Even if I remember right, for years it was the number 1 crime spot in the entire country. So take it with a grain of salt. Like these cities are built to attract people. They are not built to push you away.
No, they're not built to be transparent.
Right. They have an agenda.
Yes. And like I don't know if it's my generation, it's how I am. I love transparency to a fault, to a point. Yes, we sell real estate and we get paid and pay our bills when real estate sells through our companies. But in the grand scheme of things, our mentality is that if you just provide a lot of value, people will want to work with you.
So I think to answer your point though, Darson, I saw a section on a podcast, I believe it was a podcast, maybe from Bigger Pockets or a video sometime years ago. And at the end of the day, I even wrote a paper one time, numbers don't lie, people do. But here's the thing, if you want to research...
People can lie with numbers.
That's true, this is true. But
is that where you're going?
But here's some numbers that don't lie though, I would say, at least I would argue they don't, is that this gentleman made a statement. He said, if you're looking to invest in a market, look for 3 things, and all 3 things you need to have 2.5% to 3% or more of growth in. He said population, household value, and household income. Yeah. If you're seeing population increase, household value increase, and income increase, if each of those are seeing 3% annual increases every year, that market's going to continue to grow. And if I remember right, when I looked at this study, at that time, Des Moines was hitting all 3 of those metrics. So I'm not saying come to Des Moines or don't come to Des Moines, but we are hitting those 3 metrics. You can invest in other areas. I know Manhattan, Kansas has been hitting a lot of numbers lately. Yeah. People have told me Cincinnati, Dayton, other parts in Ohio had a lot of information. Yeah. But are they hitting those numbers? Yeah. Yes, they're great cash flow. Maybe you're buying at 7, 8, 9, 10 caps, but if the population's going down, there's an issue there.
You have to figure out what those numbers mean.
Right. But I mean, generally speaking, if you look at a market, I once call it the Warren Buffett rule. If you look at a market in over 10 years, you're seeing growth in all 3 of those areas: population, household value, household income. Yeah. And they're all consistent over 10 years. You've probably got a pretty good market you're looking at. If you're seeing dips and gaps, ask some more questions.
Yeah, it's good. It's a good rule of thumb. So about our business, my business, so ways to get a hold of me. Obviously, shoot me an email. I've got a calendar link where I send it out to anyone that wants to schedule 15, 20 minutes of just a phone call, whether you're considering the market, whether you're trying to figure out, should I invest in single families, or should you call Jared to invest in something that's, a couple $1 million, or you can work with me too. Either way, just give me a call. I like the consultative viewpoint on it. If you have invested, just reach out and set some time up with me. Check out my YouTube channel, just Darson Grantham. Most of the content is about finances, real estate, the economics of Des Moines in general. So that's where you can get a hold of me.
Yeah, and Jared Huseman here, president of the Catalyst team. We're a team part of KB Commercial Realty. Again, multifamily specialist for the state of Iowa. You can just Google Catalyst team. We spell it a little differently, K-A-T-A-L-Y-S-T, catalystteam.com. Otherwise, you can just find me, Jared Huseman. I'm pretty easy to find. It's 1 S, 2 N's, Husmann. Google me, we'll get together, connect. Again, as Darson kind of hinted at and said, I think we're very just consultative. Yeah. Just giving advice, giving our thoughts. We're not hard sale guys. Like I'm not gonna ever push anybody to sell hard. It's just we're gonna give our thoughts and hopefully that you make the best decision as a consumer.
Yeah, we might push your buttons and try to just figure out, what do you really need. But other than that, pretty transparent and consultative.